Welcome to Smart Money Simplified with Brent Mekosh from The Wealth Stewards. In this podcast, Brent discusses some of the most important and interesting topics of the day as they relate to finance, the economy, and beyond. Now, on to the show.
Welcome to the Smart Money Simplified podcast with Brent Mekosh. Brent, it's good to be with you, especially today. Lots of things going on to talk about.
I am doing fantastic, and I'm really excited about today's guest. Those of you that are clients know that we made the jump from the broker-dealer side to the RIA side, and Concurrent is a massive, massive part of why this has been successful so far. And you're going to learn a lot more about Concurrent, a lot more about what this RIA space means versus the world that we came from. And I'm just super excited that I've got Nate Lenz on. He is the CEO of Concurrent, who is our partner in this RIA world, and I'm just excited to have this conversation with him today. Nate, thank you for joining me.
Happy to be here, Brent. Really excited that you guys are on board.
Well, we're definitely fired up to be here. And I think that, this conversation to me is interesting for a variety of reasons. Obviously, you and I are both personally invested in what's happening with Concurrent now. But also, I think this is a really, really fantastic entrepreneurship story. And so as we kind of dive into Concurrent and what you guys do, I really want to take a step back first and talk about your genesis in this business. To start, what got you involved in the financial services business?
I started in the financial services business at a young age. If you want to take it all the way back, when I was in high school, I think we did an economics class, and we did a stock market game, right, which is where a lot of this starts. And me and one of my good friends then were a team, and we had found, since we had such a short time frame, we based it all on trading. So we used to go on this website like earningswhispers.com, figure out which firms were reporting, try to make bets on which ones would beat estimates, and just have huge swings and put all the money there. And we found out pretty quickly that that's not really what investing is all about, but it piqued our interest. And then I had the opportunity to intern with a financial advisor the summer between my senior year of high school and freshman year of college. I'd also worked with a CPA firm a little bit in high school that was affiliated with a broker-dealer. And so I actually had the opportunity. I passed my Series 7 in October of my freshman year of college.
That's amazing.
I was affiliated with HD Vest, had some friends and family as clients, and really set off then working to understand the wealth management business. Had some internship experience in institutional sales and trading. And then ultimately, once I graduated college, landed full-time at Raymond James. I think that's actually where we crossed paths.
That's how we crossed paths, exactly.
Yeah, absolutely.
Now talk about that. So first of all, where'd you graduate from school?
Went to Columbia University up in New York. I grew up in the Tampa Bay area originally. Ended up playing football at Columbia all 4 years. And had a phenomenal experience, but loved to be near the water. So when the opportunity to get back to Tampa arose, I ran back as fast as I could.
I think New York is a place. I mean, I was there from basically 22 to 32. I think it's a fantastic place to go and spend your 20s, but it's also really good to get out of there. I think the air is a little bit more wide open when you head to other parts of the country, particularly down in Florida and out here in Arizona. So you land at Raymond James. What did you start doing there?
Yeah, so I did a rotational program to start. I spent time in taxable fixed income trading, equity research, and then the last rotation that I had during that 1-year program was with a department that I was unfamiliar with called RJFS Regional Management, which was the sales management, relationship management arm of the independent broker-dealer. And of course, coming out of school and, having a background on the capital market side of the business, the initial thought that went through my head was, hey, well, you can't get all great rotations. So, I'll get through that one and we'll figure out a place to land. But it was exciting. Being able to really start to understand the wealth management business piqued my interest. At that time, they were working to build out a succession and acquisitions team to support the independent broker-dealer and the RIA custody channels there. At the ripe age of 23, I had the audacity to apply for the head of that department. Made it all the way through the interview process. We got to the last interview, and the COO at the time, Jim Fulp, I remember him, sitting me down and saying, "Hey, Nate, we love you. You're not qualified for this position, but we'll create a spot on that team for you." And had the opportunity then to work with the gentleman, Patrick Jinks, for a number of years. He had spent 15 years in Big Four accounting, learned a ton on deal construction, valuation. So it was a great educational process. But it was in those days that really I saw the need for succession planning, specifically in the independent space. Most advisors
100%.
unlike you, don't grow up on that side of the business, right? Most grow up in a wirehouse. They've made a move to independence 15, 20 years, into their careers. And so when you start to look at the age demographics and you start to look at how fragmented that space is, there was definitely a need for it. And I think Ray J was forward thinking and building out a team to support their advisors in that capacity.
Well, indirectly, that's kind of what led us here, because I do think that succession planning piece is so important, because to those of us that are in this industry, not only are you taking care of the clients that you're working with every single day, and you want to make sure there's proper succession in place for that, you care about your team, you care about your family, you care about these businesses that you've worked so hard to build. And, my partner now, Jeff, that is really what we've known each other for a long time, but that's one of the things that really connected us and got us talking about a path forward, because we were each other's catastrophic succession. And I do think you're correct on that. Raymond James is very forward thinking in putting that out there and making that a priority for advisors to address. No question about it.
Yeah, it's your life work, right? And being able to make sure that your clients are taken care of, your staff is taken care of in the event that something unforeseen were to happen. I think that's just prudent planning. And there's not enough of it in our industry. And beyond that, I look at it as a great opportunity. And that was one of the things that I really focused on while at Ray J, was helping firms who were actively looking to grow through acquisition, to facilitate mergers like the kind that you just completed with Jeff, because there's, I think, tremendous benefit in the power of partnership, right? Definitely. If you could bring different expertise to the table, that can create phenomenal outcomes for clients. And being able to facilitate those types of transactions and consult on how firms are able to integrate and come together is definitely something that I'm passionate about. And I know that you guys have hit the ground running with your new partnership.
So after your focus on that with Raymond James, what was the path forward like from that point?
Yeah, so in some respects, similar to you all, I went independent myself, right? So I started a consulting business back in 2016 called Inspire and Acquire. And we worked closely with wealth management firms, again, that were looking to grow through strategic acquisition, or that needed support in implementing a complex succession plan, whether it was bringing new advisors into the business and creating career paths and paths to equity ownership, facilitating transitions. We would go very deep with firms and helping them facilitate those different activities. What we recognized pretty quickly into the run with our consulting business, and I had a partner, Scott Steele, who's actually with us at Concurrent still today, works on our capital strategies and M&A side. But what we learned very quickly in that was that we had a number of firms that were operating in different markets around the country. They all had their own brands. They were operating independently. They had tremendous expertise that they could bring to the table and contribute, and they were running substantially similar models. But for any one of those firms to really build a business on a scalable and repeatable manner, it would have been cost prohibitive, right? Because in order to grow in that manner, you need things like tremendous operations teams, transition teams, compliance teams, all the stuff that doesn't necessarily move the needle on how you're serving a client on a day-to-day basis, but that is necessary to run in the background. It's expensive, right? And it takes scale to be able to build that. And so what we ended up doing is we proposed a partnership to a group of our firms. We brought 9 of our clients together. We were in the Atlanta Airport Marriott Hotel, in a conference room that couldn't quite fit all of us in it. And we presented this idea called the superstructure, which was, how can we jointly invest in a shared infrastructure, still allow you to maintain your independence and autonomy? How can we scale the scalable, start with the most operational functions, and over time, move to items that impact the end client experience? And the idea is that we can do this better together, that there's power in that partnership, and that the community that we can create better outcomes for clients. And so we hit the ground running. Now, it wasn't all roses and unicorns, so to speak.
Real quick question for you, Nate. When you were doing this consulting, were you doing this still under RJ's umbrella, or were you off?
It was outside of RJ. Yep. So I left RJ in August of 2016. So this is post Raymond James, but it was a lot of the same consulting work that I had done at Raymond James for the 6 years prior. So very similar, just doing it under my own flag versus as an employee of the organization.
Got it. And so you hit the ground running.
We hit the ground running. There were 9 firms at that table. 9 became 8, 8 became 5. We launched with 5. We ultimately bought out 2 of the firms a couple of years later. As you can imagine, managing a business with that many cooks in the kitchen can get complicated. And so we went through our share of scraped knees and bloodied elbows, which I know many entrepreneurs do, and many business owners do throughout the years as they work to form partnerships that can be impactful. And so, once we hit our stride in 2018, 2019, we really started to build the business through experienced advisor recruiting. primarily working with teams that were leaving a wirehouse, wanted to go independent, wanted to offload a lot of the back and middle office functions so they could focus on their end client. And we were able to build our team, and we actually built that business on the Raymond James platform, right? Very similar to the path that you and Jeff have taken. About a year and a half ago, we officially launched our own registered investment advisor and made the migration off of the Raymond James platform to becoming multi-custodial. And really the benefit for us, and we feel that directionally this is where the industry is headed, is clients want objectivity. They want independence, right? And I'm not just talking about business model and compensation models, but it's in terms of objectivity of advice, being able to move across platforms to find the best available solutions, being able to leverage competition for your clients' benefits. Those are all things that I think are mission critical as firms grow and evolve, and achieving full independence is what's allowing us to do that. And so, as we've evolved our business, where we stand today is we are a platform for and a strategic investor in independent wealth management firms. That's ultimately, I think, how this conversation started, as you and Jeff were seeking further independence for the wealth stewards and wanted to be able to plug into these additional platforms, have additional investment resources available to your clients, improve technology, being able to upgrade on all of those fronts. That's what we're here to facilitate. And really our mindset through all of this is our best opportunity to serve your client is by serving you as the advisor. And so when you think about Concurrent, we're there to handle the back and middle office for the wealth stewards, to be able to open up access to a lot of these different resources and custodians and solutions for you, but at the same time, preserve your independence and autonomy and allow you all to operate in the way that best serves your clients.
Now, I want to put this in really simple terms here, because I do believe that a lot of advisors I know are going to listen to this conversation. And the one thing that I will readily admit is when we first had our first conversation, probably September, October last year. So, I mean, we started down this road more than half a year or so ago. I thought I knew the difference between the broker-dealer channel and the RIA channel. What I've learned over the last several months, and what I'm still learning, is that I knew the Raymond James system. And it's almost like you're this, Jeff has used the term, and I'm going to steal it from, you're an indoor cat that all of a sudden goes out the front door, and you look around and you've got this massive amount of different solutions you can implement, and it's this giant wider world. And the key in that is obviously that you want to make sure that you're bringing the best solutions to clients, also that you don't get run over because you don't stumble into the wrong freeway.
Sure.
So take yourself now, let's really kind of dumb it down, pretend you're talking to first grader or me in this case. Really discuss the difference. If you are an advisor out there that is in the broker-dealer world, that is within a closed system, what is that primary difference if you're looking at the RIA space? And from a client side, clients listening, how does this serve them?
Yeah, and I think the word that you just used to describe it is exactly right. You're in a closed system, right? So when you're operating in a broker-dealer platform, ultimately the firm that is determining your compensation is also determining what's on the menu for you, right? So there's some inherent conflicts in that. I think another big difference is in the broker-dealer space, right? And I don't know if this is always fully understood by clients, but they are beholden to a suitability standard versus in the advisory space, you're held to a fiduciary standard. Mm-hmm. So there's some nuance to those comments, because at the end of the day, as you've been working with your clients in an advisory capacity, although you were sitting in a broker-dealer structure, the advisory side of your business was still regulated by the SEC, and ultimately you were still held to a fiduciary standard in that capacity. So, at the end of the day, I think the big difference is when you're, from an advisor's perspective, if you're sitting in a broker-dealer, it's like having a landlord, right? You have an apartment, you've got a landlord, right? You're not able to necessarily start knocking walls down and moving the building around, but you have a level of independence and autonomy. When you think about the RIA space, right, ultimately it's like going to your own single family home. I guess if you're affiliating with Concurrent, to some degree, you're part of an HOA, but that's kind of taking the analogy maybe a step further. But being captive to a singular platform, being limited to the technology that's available on that platform, being limited to the solutions that are available on that platform, I think are limiting. Now, at the end of the day, you're correct. Becoming an outdoor cat, the world is your oyster, right? There's a lot out there, and not all of it's necessarily good. But that's where, at the end of the day, the way that you all approach the business, the way that we approach the business from a conservative mindset, we want to make sure that we're getting the right solutions. But I think there's also a cost element at play here. And by operating as a fully independent firm, not captive to a single platform, you're now an institutional client of the street, right? Those vendors that you're now working with and custodians are competing for your business. That creates pricing power, right? That helps save money for clients. You have the opportunity to invest in lower cost share classes. From a lending standpoint, you've got multiple lending options, right?
Yep.
So I think that opportunity to leverage competition for the client's benefits by being fully independent, becoming a homeowner, right, shedding the landlord, is extremely advantageous, not to mention the fact that when you start to look at the technology that's available in the RIA space, there can be significant upgrades across a number of aspects of the business.
Now, you read my mind there, and there's a couple points that I want to discuss with you. Is, as I've had this conversation with clients, a lot of reasons that we opted to make this leap. The first was really starting with a merger, Jeff, and that was scale, and that was 1 + 1 = 4, and all the other things that come with that. But for me, and I'm curious your take on this, a really, really big part of this was, I think that from a standpoint of technology being implemented across our business, I think we're not even at the front end of this thing. I think it's going to be absolutely explosive in the next 5 years. And I felt that we need to get on a platform where we could implement a lot of these different solutions. Because I truly believe that, and tell me if you think I'm wrong or if you agree or add some color to that, I think it's very possible that if 50% of the people in 5 years that are in our business could be out of business. Technology could very easily displace them. However, if you can leverage that technology to better serve the clients and bring a better service, to the table, it could potentially be explosive. And one of my major concerns was being inside of a very slow-moving organization, as nice as it was, and I've got nothing but I left with great feelings, that we would not be able to implement some of these solutions fast enough. So can you talk a bit about what you think? Am I right? Am I right with that? And secondly, what do you think is coming from a technology standpoint that both clients should know, and also if there's advisors out there that are wondering how their business is going to look in 5 or 10 years that they should have on their radar?
There's an advantage to being nimble, right? And to being able to tap into different technology vendors and resources versus being beholden to what's developed at a home office level, right? There's the concept of being a huge ship with a small rudder versus being able to tap into this huge wave of new technology that's coming out, right? AI is kind of the 800-pound gorilla in the room that's talked about quite a bit. I think the benefit of AI solutions, and we're experimenting with it now on a couple of different fronts. I think the immediate application on what's out there now is how can we make you more efficient as the advisor, right? So one of the solutions that we're deploying is pulling in through open APIs data feeds from all of the learning management systems of our vendors. So whether it's Fidelity as a custodian or Black Diamond as our client reporting tool or Practify as our CRM, our AI co-pilot is able to tap into all of their training materials. So if you have a question that pops up, or if your team has a question that pops up, you ask the co-pilot, it pulls it, it cites the source, it brings additional materials to the table. You're able to get answers much more quickly. And so that's helping you operate more efficiently. I also think that the other side of that is it can change the way that we engage with clients, right? Another solution that we're working on, and this has worked great with some of the workforce planning that we're doing as part of our corporate retirement plan business, as well as working with some of those Henry clients that our teams work with, the high earners, not rich yet, younger demographic of clients that want to engage differently. We're working with an AI solution that ultimately will help them navigate what we call micro planning journeys. So whether it's building emergency savings, opening a Roth IRA, right? Some of the basic questions where they may not have the complex financial planning needs yet, but they still need help and support from a planning perspective. Leveraging AI to service those clients efficiently can be a tremendous resource, right? And that allows you to serve clients, whether or not, let's say you've got the patriarch, matriarch of the family, being able to serve the kids and the grandkids in an efficient manner brings your ability to serve that family to the next level. So I think we're going to really be doing some exciting things on that front. Also, when you start to think about things like UMA functionality, being able to have third-party managers in a singular account with individual equity portfolios, fixed income portfolios, ETF or mutual fund sleeves with a single K1, right, and single reporting structure, that helps consolidate items. Advanced account aggregation features, the ability to feed in outside assets, whether it's private investments or real estate. So being able to see the client's total financial picture. One new solution we're excited about that we have an enterprise relationship with is a company called Asset Map, right? It's being able to show all of your client's financial picture on one piece of paper, almost like a mind map exercise, but showing everything from insurance policies to real estate holdings to their accounts in one piece of paper simplifies the traditional 100-page financial plan to the stuff that really matters and allows those conversations to be impactful. So our ability to go out to these different vendors who are really pushing the envelope on what's available to the end client not only will improve the way that we're able to engage with clients, but really improve the efficiency in which we're able to engage, freeing up time to go much deeper from a planning perspective.
The other thing I want to talk to you about, because I think it's become a much more important discussion that we're having with clients, is alternative investments. And again, we came out of it was a very nice harbor, but we had very limited offerings in terms of what we could bring to the table. That for me was a major driver, because if you look at, it's like, was it 1% of all the companies out there are actually publicly traded?
Yep.
You've got this entire world that's out there from the alt standpoint. Talk a little bit more about, for those considering the RIA space versus the broker-dealer side, what does the world look like in terms of alternative investment opportunities?
Well, you hit the nail on the head, right? When you look at the opportunity to invest in private markets, whether it's in private equity, private real estate, private debt, there is an abundance of opportunity there, right? Now, there's also been this large wave to start to democratize alternatives. So when you start to think about what's available out there, you have I'll call them the alternative supermarkets, the Cases and the iCapitals of the world, of which, we subscribe, right? So we have both of those available on our platform, and they have a robust lineup of alternative products and managers available and at your disposal. But what I'm really excited about is some of the more bespoke solutions that we're working on. So we've partnered with a firm called Proteus. They provide fiduciary oversight and operational due diligence and allow us to build really curated portfolios across, whether it's private equity, private real estate, private debt, or combinations. And within those, we're able to drive significant alpha because we can then start to layer in addition to your traditional managers, we're able to layer in direct co-investment opportunities, right, or development opportunities that our firms can get excited about. We have a capital partner ourselves, right? Merchant Wealth Partners invested in our business back in 2020 and has been a growth equity provider to us. They also have a number of different alternative offerings at their disposal, whether it's co-venture on the venture capital, venture debt side, Maxim on the private real estate side, or Merchant itself, who is an active investor in the wealth management space. Again, as an example, all of those are available to our end clients through the solutions that we're able to provide. So a much wider menu than we were accustomed to having in the broker-dealer space.
Yeah, I think it's vitally important too, because you come out of a year like 2022, which is now a year and a half in the mirror. But what you learn at that point is, assets that are you think are uncorrelated actually become very correlated in certain situations. The history of the markets is not what the history of the markets was, say, from the year 2000 to 2020. Things look very differently at that point. Another thing that I'm very excited about is really diverse lending opportunities. I think that's one area where, in the past, we've had a rate, we could offer it, but we couldn't get competing lenders. And that, for me, was a major driver of this decision to go fully independent. I wanted to have the opportunity to have multiple lenders competing for client business. So talk about what that looks like in the RIA world.
Yeah, no, it was, and I'll just share our experience. So when we initially made the move and launched the RIA, we had about a $300 million securities-based lending book of business. We needed to find a solution for it. We were able to, with our multiple custodians, having access to Schwab Bank on the lending side, with Schwab as a custodian, as well as having access to US Bank and Goldman Sachs as part of the Fidelity platform, in addition to Fidelity's multi-margin product, we had an array of solutions available depending upon the client's borrowing needs. And what we were able to do is ultimately put that book of business out to bid, right? Find the lowest possible rates, get most comfortable with the operational support in getting those loans transitioned and servicing those loans on an ongoing basis. One of those lenders came in low. We felt most comfortable with another one of those lenders, not to share any names on the podcast, but we went back to that lender and said, hey, if you're able to match these rates, we want to do business with you. And they did, and it resulted in a significant cost savings for our clients in terms of the rates that they were paying, which was another advantage, to your point, of leveraging that competition to find the lowest possible cost products, where it makes sense. But I do think it is a combination of cost and service, which led us to the ultimate solution that we chose for that book of business. Now, every additional client that comes to the table, right, we're going through that same exercise to make sure that we're finding the best-in-class solution for them. And the same applies to other aspects of our business, whether that's custodians, managers, and the like.
Now, let's talk a little bit about the business planning, business succession side. For Jeff and I, what one of the sweet spots that we have is working with clients that are either looking for a growth partner, business succession, maybe an outright financial sale, at some point in the future. And the investment banking relationships are extremely important to make that happen. Most people think about if there's going to be an exit for a company, your traditional thing that you're thinking is, oh, it's going to go public. You really don't. 99% of them, it's all private equity based. But talk about, now that you're in this RIA world, or we are in this RIA world, what do the investment banking relationships look like for people that we work with today, or potentially could be working with us in the future?
Yeah, and I think it really runs the full spectrum. So if you did have a larger company that you were working with that needed the capabilities of an initial public offering, that's a situation where, our custodial relationship with Goldman Sachs could come into play. For the vast majority of business owner clients that our teams work with, they're operating businesses that may have between, call it 5 and 25 million of EBITDA. So those might be prime for either a private equity or a strategic buyer to step in and acquire those businesses. There are banks that we work with very closely. An example is Skyway Capital Partners that's based here in Tampa. There's a number of others that are a part of our network of investment banks that we work with and have a strategic relationship with that can ultimately assist those businesses throughout the sale process. Whether it's they're contemplating the sale, they're looking at valuations, they're evaluating which path is best. Do I go private equity? Do I sell to a strategic? Do I look at some type of a leveraged ESOP solution? Being able to navigate a lot of those really goes hand in hand with the planning work that you do. And so, really making sure that we find the best fit in terms of the investment banks at our disposal based on the size of the business and the industry that it's operating in. We can be very nimble again, right? We're not just limited to one solution there. And we've seen that have a great impact on the ability of our end clients to monetize their life's work, which again, with the influx of private equity investment across a number of different industries, we're seeing quite a bit of transaction volume in that space. And so having great partners like Skyway or like Goldman on the higher end presents a tremendous opportunity for us to provide that as a service for our clients and make it part and parcel to the planning relationship that you're already facilitating.
I'm going to put you on the spot here with a question because it's certainly one I don't have the answer to, and I'm not asking you for a crystal ball. But one of the things that's been talked about for years for people on the independent broker-dealer channel is what it would look like if independent contractor status was lost. And now, obviously, there's been a ton of assurances that that's never going to happen. I will tell you, though, it was something that was really on my mind because I did not want to have to respond to a change or react to a change. I wanted to very proactively put myself in a position where who I am an employee of was no longer in question. What do you think is going to happen industry-wide with independent contractor status in the BD space?
The independent contractor status question is interesting, right? You would think that there's enough lobbying dollars behind it and that there's enough exceptions that could be made to ultimately allow the independent broker-dealers to skirt that equation. That being said, based on the fact that they are limited to a singular platform, right? Yep. Think about your days at Raymond James. You have a singular product offering, you're sitting on a singular platform, you're using singular technology. There's an entire additional channel of financial advisors using all of the same resources that are W-2 employees. It's hard to argue why one should be treated differently. When you're in the RIA space, the wealth stewards, you are the business owner, right? You have access to multiple platforms. You can leverage Fidelity or Schwab or Goldman on the custody side. You have access to a variety of technology vendors and building out what's going to be the best tech stack and solutions for your clients. I can make a very easy argument as to why you've got a high level of autonomy over what you're choosing to utilize and how you're choosing to do it.
Absolutely.
In our relationship, just an additional piece, right? The way that our structure is set up, we are a platform provider, so we are a vendor to you, right? Providing operations and compliance and additional support to help you run your business. And we're a partner as well, right? And in our model, there's a minimal exchange of risk, right? We're acquiring a small minority equity stake in your business. You're gaining equity in our business. And so it creates not an independent contractor relationship, but a K1 partner relationship. And so I do think there's some meaningful structural differences between the two. But what it really comes down to, going back to the third grade explanation of it, is when you shed your landlord, right, it's hard to argue that you're not a homeowner.
Right.
I think that's what it comes down to.
And one thing I want to kind of close out with, because we started with discussing succession planning. But I think this is a business right now. Demographics are absolutely on the side of people that are a little bit younger, that are not ready to retire yet, that want to grow. The being now in the independent RIA space, the ability now to look around at the universe and plug teams into your system is exponentially larger than it ever could have been in the past. Talk about what that looks like in your world and what you think the opportunity set looks like there.
Yeah, I think if you look at our industry, you alluded to the aging demographics, right? There's a massive talent gap. And from my viewpoint, I think the reason for that is there's a colossal lack of patience in our industry. When you had training classes come to the table, it's okay, how many assets can you bring in and how fast? And if you can't achieve those hurdles, ultimately there's not a place for you here in the business.
And nine out of 10 bust out. They're not going to make it.
Exactly. Now, I would say, though, now more than ever, you have these younger advisors that come into the business with a tremendous amount of competency. You've got more and more universities that have CFP programs as part of their undergraduate curriculums. These folks have experience on the investment side of the business or the planning side of the business. We can leverage that competency. What's never going to change is that this business is an apprenticeship business. You have to ride shotgun on meetings, be sitting in those client conversations across from a grieving widow, right, across from a business owner contemplating monetizing their life's work, to understand the gravity of those situations, how to operate, how to express empathy in those situations. That's not learned in a textbook, right? The only way you're going to get that is by being engaged in an apprentice-style relationship. That being said, if there's no patience, if the primary focus is on raising assets, you're never going to have the opportunity to get that experience. And so from our perspective, what I'm most excited about as we operate in the RIA space, yes, there's going to be a tremendous, we're talking from an end client perspective about the generational wealth transfer all the time, right? We also talk in terms of business owners. I know a demographic that you work with quite closely, that 9 out of 10 business owners are going to look to sell their business within the next 10 years. So you've got this transfer of business ownership.
Tens of trillions of dollars.
Exactly. We're not immune to those trends. If you look at our business, it's probably even more extreme with the number of advisors that are in the older generations that are going to need solutions there. That's exciting. That presents an opportunity. But I think the firms that are best able to develop talent within their ranks, that are able to have patience in doing so, are able to leverage their competency along the way to help move the needle. Those are the firms that are going to be successful 10, 15, 20 years down the road, which we intend to be. So that is a big focus of ours. We've got a goal of developing 100 new advisors over the next 5 years within our ranks, within our centralized planning team. And they're there to support you, right? The way they gain that experience is by supporting you all in helping you with financial plans or helping you with investment proposals. Being able to get hands-on experience in those areas and contribute their competency early is what's going to lead for them to be effective advisors in the future. So that's what's front and center, but it's exciting, right? I think it represents a huge opportunity that we're poised to capitalize on.
And one of the things as we've had this discussion, as I've gotten to know you a little better over the last several months, is your story. I'm going to sort of close out with this. Your story is a true story of entrepreneurship. And to me, this is that's what makes this country unique, in the sense that you can have an idea, you press forward, and great things can happen with that. Not just in the financial services business. What do you think is your greatest lesson learned as an entrepreneur who that I know has run into several different walls before you actually found your way around or climbed over the wall to get to where you are today? Because you're a young guy and you've achieved an extraordinary amount of success in a very short time. What kind of advice would you give to the young you or other younger people out there that are looking to do something great in the world?
I would say that your success is directly correlated with your ability to build trust, right? And that trust is developed through competence and accountability. There's no substitute for that, right? You've got to be able to build credibility through competence. You have to be able to build trust by showing up every day and chopping the wood. And if you do that, there's a great book that I read about a year ago. It was very much formative to how we approached the move to the RIA space. It was a book called Canoeing the Mountains. And it followed the story of if you're familiar with it, it follows the story of Lewis and Clark. Okay, so it's actually really interesting. So it follows the expedition of Lewis and Clark, and the concept was that they were going to navigate the Missouri River, right, in pursuit of finding the Northwest Passage, a water route to the Pacific Ocean. And they assumed that, similar to the Appalachian Mountains on the eastern seaboard, that once they reached the headwaters of the Missouri River, is that they'd have a nice steady downhill paddle to the Pacific Ocean. Well, when they reached the headwaters of the Missouri River, what did they find? They found the Rocky Mountains, right? And so they had to ditch the canoes. They had to learn how to climb. And so it talks a lot about how you can lead off the map, right? And your ability to lead off the map is directly correlated with the trust and credibility you have in leading on the map. And so I don't think there's any substitute for it, but that's a good book recommendation. I think you'll see a lot of we just had our conference in Atlanta the last couple of days. It's called the Ascend Conference. There's, mountain themes everywhere, but a lot of it has a lot to do with that concept of adaptability and being able to manage change in a manner that is beneficial to all parties, but it really stems from the competency and the trust you've been able to develop in the easier going situations that we encounter on a day-to-day basis.
Well, I'll say I've gotten to know you quite a bit, in the several months that got us here, and you've definitely built that trust. Now, to other people out there that are listening to this conversation that want to know more about Concurrent or want to talk about potentially partnering with you, how do they find you?
Yeah, poweredbyconcurrent.com is a great way to take a look at our website, understand our platform. LinkedIn is also a great way to find us, Concurrent Investment Advisors. And I think at the end of the day, we've got a great team. We're approaching 50 people in our home office. As an organization more broadly, we've got over $8 billion in assets under management. We've got another $11.5 billion of assets under advisement in our corporate retirement plan business. And we're just getting started. So, we've got scale, we've got resources, but at the end of the day, we're still in a lot of ways entrepreneurial, right? We're a startup. We're there partnering with firms like the Wealth Stewards to find ways to add value to your business, because that's the lifeblood of our organization, and we're never going to lose sight of that. So would encourage them to take a look at the website, take a look at some of our posts on LinkedIn, some of the thought leadership stuff that we have out there. I think that'll give individuals a good feel for who we are as an organization. And if there's an appetite to have a conversation, we'd love to have it.
Well, you mentioned something there that I think is important to close out with. When Jeff and I we knew you prior to this, but when we first came down to see you and have a serious discussion last December in Florida, I walked out of the offices and I said, this is a very entrepreneurial place, and I think that creativity, that ability to adapt, it's what moves the ball of civilization forward. And so I think that it's an important thing, and we're happy to be a part of it. So, Nate, thank you very much, man. I appreciate you pulling some time out of your day to have this discussion today.
Thank you, Brent. Excited to have you guys on board.
Yeah, Brent, this podcast always has interesting conversations with very interesting people. So I enjoyed listening to that one. We know how to get a hold of Nate. For those of you who are listening to this podcast who want to reach out and have a further conversation with you, how do they do it?
Yes, our phone number here is 602-255-0555. Either myself or a member of the team will pick up. Also very active on LinkedIn. You can search me on LinkedIn. I put stuff up there almost every single day. One of the things we're excited about now is we're across multiple different platforms for this podcast, and our website is tws.finance. And so if anything, if you're an advisor, if you want to talk about this, I can share my experience with you. If you're a client that wants to know in greater detail what this partnership and relationship could mean to you, I'd love to have that conversation.
That is great. And there's one thing that you can do if you're listening to this podcast and you've never listened before, hit the follow button, become a subscriber. That way, every time Brent turns out a new issue or episode of this podcast, you'll be notified and you can listen. I would also ask that if you like it, tell people about it, share it with others. The word of mouth is a wonderful thing in terms of promoting this podcast and would be much appreciated. Until next time, I'm Bill Tucker. On behalf of Brent and everybody at the Wealth Stewards, thank you for taking the time to listen today. And I would urge you, go out today and make it a great day. Until next time.
Thank you for listening to Smart Money Simplified. Have questions about topics covered during the show? Visit our website at www.smartmoneysimplified.com or give us a call at 602-255-0555. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of the Wealth Stewards or Concurrent Investment Advisors. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.